Good evening, everyone. Thanks for taking time on a Monday evening to learn more about forex trading. So, as I mentioned, right, I already shared this. So, if you see stock market, it is like a $28 billion market, whereas equities, right, including all the Nasdaq and all the exchanges. If you see the entire one, it is like 191 billion market. Whereas futures, right, ES, NQ, crude oil, even though it is a global one, it is like 437.4 billion market. Whereas forex market is nearly 2 trillion plus market as on today. Because it is again a global market, and there are many right, millions of traders who use forex as to create the income, right? So why not have right learn about this and take an advantage of, because currencies will be every day, there will be change. So why not use that to our advantage? And just like, for example, if you know one curry, right, if you know recipe for one curry, then basically for most of the other vegetables, right, vegetables might be different, but your recipe, right, whatever you do, generally most of the process is same. In the same way, when you know technical analysis, or when you have tools which shows you like, okay, which stocks to buy, which option are good to buy, or which crypto is good to buy, is it futures or right, yes, is it good to buy, good to short, then we can use the same strategies, same concepts, same tools and systems even for forex market also. So now, instead of you just dealing with stocks, or just dealing with options, or just with futures, now you will have another security to trade, which the major advantage is you can do it at any time, right? It will not disturb your working hours. It is nearly 24 hours, right? 5 days a week you can trade futures. So let's see some major differences between forex market and stock market. The first thing is, you don't have commissions. Even on stocks also, not many brokerages charge commissions nowadays. But still there are, for example, IBKR still charges commission on the stocks purchase, or when you sell it, they charge some commission. But with forex, you don't have such commissions. Then even with a $50 account also, you can start trading for forex, because you have a huge leverage. So if you have $1, you can trade up to $50 to $100 using that $1 as a leverage in forex. Whereas generally in stock market, it is 2 times to maximum 4 times, right? That's the leverage which they give. But in forex, you have a much higher leverage. And you can trade in any direction. You can short, right? Just like futures. In the forex also, you can long, you can do long, you can do short. In stocks also you can do, but there are many stocks where you may not have stocks for shorting available, or there might be high interest charges, high borrowing charges. There will be a lot of limitations on the retail traders when you want to short the stocks. And then market is open 24 hours, 5 days a week for forex. Whereas we know stock market generally 7 to 8 hours per day, only for 5 days a week. So where you are limited, because most of us are working in a full-time IT job or some other primary job, so you don't have opportunity to take advantage of a lot of movements in the stock market or in the options. So, and then you don't need a lot of capital requirement, as I mentioned earlier, whereas here you have a strict margin requirements. You need to have a security deposit or a margin, where right maximum you can do like 2x. If you have 25,000, you can max to 50K worth of trades or something like that. But in forex, you don't have those requirements, which is good and bad. Good is, if you are in right side, then even with a minimal capital, you can make nice profits. But if you are in wrong direction and you are using a lot of leverage, that also can lead to risk. But yeah, this is similar to futures, forex market, but with much higher leverage and with much more opportunities. Then many of you might be right thinking like, okay, what is this forex, right? In stocks, you are doing, you are buying or selling stocks. In option contracts, they are like derivatives. Using stocks, you are buying the option contracts, or futures, again like ES and Q, all those things, you know. But what is forex? Forex is nothing but foreign exchange, right? The full form is FO stands for foreign, or FOR stands for foreign, and EX stands for exchange. And while forex trading, what we do, we basically we buy and sell a country's currency with another country's currency and make money on the difference, right? For example, you may want to buy, uh, US dollars, right? You want to use Indian currency. You see that, oh, there is some good news coming, or some new things are coming up in India, and you feel like the currency value of India will, right? For example, now it is one USD is approximately 80 rupees. You think that there are a lot of new changes are coming, technology is moving like anything. In few days, India, right, instead of 80, it may become 60, right? One US dollar might become 60. And you can trade, uh, for example, you can give, right, you can trade Indian rupees with USD, because you are thinking that Indian rupee value will go up like anything in next 4 to 5 years, because of population, because of technology changes, because of whatever reasons. So basically, based on the, right, either you use technical analysis or you use fundamental analysis, you are trading, buying and selling one country currency by comparing it with another country's currency. That is basically forex, right? For example, when you travel to US for the first time from India, you might have went to some, right, some foreign exchange place, and you might have given some Indian rupees to them. They might have given you some USD. Or if you are going to UK for a vacation, you will go to, like, in airport or somewhere else, you will go and give some USD and you will take some pounds. Or if you are going to Switzerland, you will take some Swiss francs, right? That is nothing but you are exchanging one currency and getting other currency, and they charge some commission for doing that service. And for example, after coming back, you may get less money, right? For example, you took $1,000 worth of pounds. When you come back, let us say you have 500 pounds left. When you give it back, you may not exactly get the same amount of US currency which you paid. Within that 1 week of your vacation, there might be a lot of political changes which might have happened. There might be a lot of new things might have happened. The value between USD and the GBP, right, British pound, might have changed. So there might be, you might get more money than you expected, or you might get less money than you expected. So just like, right, when you have some X number of stocks, and if people continue to keep buying that stock, the value of that stock will keep going up, because there is a high demand and there is a limited supply. As supply goes down and the demand increases, the price value increases. In the same way, currencies also, right? You may think that these countries can print whatever currency they want, but they have a limited currency. They cannot just keep on printing, right? With which all this type of inflation, all these things will happen. But generally, every country has some limited currency. As people keep on buying that currency, the value of that currency will increase. If people keep on selling that currency, the value of that currency will go down. So based on this demand and supply, we can use the forex, right, forex trading, and we can make profits based on either technical analysis or fundamental analysis. So who are the people generally who, right, who does this for forex transactions? It can be traders, forex traders, or it can be travelers who are visiting other countries. They buy currency or they sell the currency, or money lenders, or businesses, right? For example, Tesla want to start something in India. They want to start a big campus or big manufacturing plant. They may exchange USD with Indian currency because they may want to pay all the salaries at that location. Like that, there can be some businesses which may want to buy raw material from India to import them. Like that, businesses also need to sell the currency and buy a different currency, or these fine banks, brokerage firms. So there are a lot of, right, all these people are involved with the forex transactions. So they are basically buying something, buying some country's currency and selling some country's currency, because of which the demand and supply will keep going up and down, because of which the values will be changing, and we have to catch that momentum, catch that change, and we can make money as part of that change. So these are some terms, right? In stocks, generally we call it as long, or we call it as like buying a stock, right? In futures trading also, it is nearly same. Most of the terms are same, except that we also use rally and peak, right? For long or for buying, the other synonyms you use are rally or peak. That means something is going up. Some country currency is going up. You can also call it as rally or peak. For when some, right, currency is going down, right, you can short that currency, or you can sell the currency, or you can also call it as that currency is bearish, or you can say that currency is dipping, or you can also call it as a valley, right? These are just so that when you are when you see some alerts or something, you may see these type of terms. That's why explaining you like what are the different terms we use in the forex transactions. Rally, peak for long, for bullish, whereas dip and valley for bearish. Then what are the major advantages, right? One advantage, as we already discussed, low barrier. Even if you have $20, $50, you can start trading. And high liquidity. You have, right, as I already mentioned, huge market, global market. There is always 24 hours, 24/5. Some market or other market is open. New York market, Sydney market, or some market or other is open. So there is huge liquidity. The spreads are not wide. That means you don't pay commissions, or you don't pay, you don't do a very widespread and lose money. Such type of things are very, chances are very less. And the market is open 24/7, so you can trade it anytime you want. And there are mainly three types of markets, right? Just like in US stocks, you have New York market, or New York exchange, stock exchange, you have NASDAQ. In the same way, right, in forex trading, you have mainly three markets based on the major financial city centers. So one of the market is called Tokyo session, or it is also called Asian session. Then second one is London session, or Great Britain and Europe session. The third one is New York session. There is also called as Sydney, but these three are the most important ones, right? So, right, why you need to know about these things? If New York session is there, then during that time, generally USD currency, there will be a lot of liquidity for USD. Whereas during Tokyo session, generally your Japan and will be right, that will be having a lot of liquidity. So generally the trading will be happening in one of these sessions. So Tokyo generally starts at 5 p.m. EST and closes at 4 a.m. London from 3 a.m. EST until 12 p.m. trading will be going on. New York 8 a.m. to 5 p.m. So you can see that, right, one session or other session is open. So you don't need to just, even though you are in US, you don't need to just trade in New York session, right? Even though it is a London session or Tokyo session, anybody from anywhere can take these forex transactions or forex trades. So 24 hours, if you see, if you get up at 8 o'clock until 5, you can do in the New York session. Again, from 5 p.m. the Tokyo session is opening. Immediately New York closes, and that is opening. And 5 p.m. to 4 a.m. And again, there is a parallel overlap hours between London and Tokyo. This starts at 3 a.m. So there is a 1 hour overlap, and this goes until 12 p.m. That means London has 4 hours overlap with the New York. Whenever there is more overlap, the liquidity will be much more high, and there will be a lot more transactions, lot more traders. the spreads will be much cheaper, or right. So that is the advantage when there is an overlap between these sessions. But as a trader, we can trade across 24 hours in one session or other. Then the next thing we all need to know is the currency pair, right? As we already discussed, you cannot just buy a currency and sell the same currency. You always have to have two currencies, USD and INR, or GBP and USD. So there should be always two currencies. So that's why it is called as a currency pair. You cannot do Forex transactions like stocks with just, in stocks, you can say, okay, I'm buying Tesla stock, I'm buying a Disney stock. But when you are doing Forex transactions, you should always have two currencies. So that combination is called as a currency pair. Let us see what is a currency pair. So in order to make a trade possible, one currency must be compared to another currency. So, right, as we already discussed, if you think like Indian currency, Indian value, Indian rupee value will go up against the US dollar, you may buy a lot of Indian currency now by selling your USD. And suddenly there will be some new projects or some lot of new growth happens in India, and then you may make profit with that transaction. So always you need to have two currencies to do any Forex transaction. So whenever you see, right, for example, today morning I have shared some alerts, or whenever you see a trade alert for a Forex transaction, you see two currencies. The combination of two currencies is called as a currency pair. The first currency, right, whatever in the pair, the first one which you see is called as a base currency, and the second one which you see is called as a quote currency, right? In this example, you want to buy some euros using your US dollars. Then euro is the base currency and your quote currency is US dollars. So always the first one is the base and the second one in the pair is the quote currency. So again, what is the purpose? Because you need to know, if you want to get 1 euro, for example, you have to pay 1.35 US dollars. That is what you are paying today. Tomorrow, for example, you might be, right, you are buying euros by paying 1.35. Let us say euro value goes up so high, and instead of 1.35, you may get, when you sell the euros, you may get 1.6 USD after 1 month. That means you are making that 25 pips or that profit, right? You are buying euros now because you have some, using technical analysis or using some news or whatever, you are thinking that euros will go up. You are selling USD and you are buying euros. And if euro value goes up, then you will make nice profits. So again, remember, the first one is the base, second one is the quote currency or counter currency. Then when the base currency gets stronger, right, the first one gets stronger, the second one gets weak, right? Basically that the value of the second currency or the quote currency goes down. Or if that first one gets weakened, the second one will be stronger. So if you see a chart, right, for example, if you are buying that euros by selling USD, if euro value is going up, that means your chart is going up, or it is bullish. Your euro is bullish, it is moving up. Or if your quote currency, right, if the base currency is going down, then basically your quote currency is going up. So they are inversely proportional to each other. They are opposite to each other. If base currency is going up, the quote currency will go down. Or if the quote currency is going up, the base currency value will go down. So always just remember that you are basically, right, you want, if you are going on a long, you want your base currency value to go up. If you are doing short, you want your base currency value to go down. So don't just, right, don't get confused much. Basically, you are buying some currency and selling the other currency. If you are going long, you want the first currency value to go up. Or if you are going short, you want the first currency in that pair, you want that currency value to go down. So these are the top 8 currencies, right, which are very popular in the Forex market. One is Euros, Great Britain Pound, Australian dollar, New Zealand dollar, US dollar, Canadian dollar, Swiss franc, and Japanese yen. These are the top 8 most liquid currencies in the Forex market. So we can define mainly, right? Again, just like in futures, you have like index futures, you have Bitcoin, crypto futures. In the same way, in Forex market also, you have 3 types of currency pairs. The first one is major currency pair. Second is cross currency pair. Third is exotic currency pair. What do you mean by major currency pair? Basically, wherever you have US dollar, right, as a base currency or as a quote currency, if you have US dollar, that is called as the major currency. So you can see in all this example, right? Euros by USD or GBP by USD, USD by Canadian dollar. So in one of the 2 currencies in the currency pair, if it is US dollar, those currency pairs are called as major currency pairs. The second one, right, cross currency pair, where you don't have US dollar, right? The first one is where you definitely have US dollar as one of the currency, right? This is the most common currency pairs which most of the traders do trading is the major currency, because right, we know that US dollar has value across the globe, right? That is used as a exchange mechanism for most of gold or a lot of things. So generally, mostly traders trade these major currency pairs. The second one, cross currency pair, is where you don't have a US dollar. It can be anything like you have, right? We discussed that there are mainly eight types here, right? Other than USD, you have the other 7 in the cross currency. So you have Australian dollar by Japan yen or New Zealand dollar. But other than USD, you have the other 7 combinations. Whereas in the first one, you have the other 7, but definitely US dollar is there. Then the third one is where with the developing, right? You have one currency, which is a major currency. And the second one is like Indian rupee or Mexican dollar, like that. So, which is paid with a developing country, right? This is exotic currency where your spreads can be little expensive. So generally, most people will be trading the major currencies. This is the first popular one. This is the second popular, and then this is the third one. So, and then you also need to remember one more thing, that whenever you see an alert or a pair, a currency pair, always EUR, right? Euro is paid. It is always first. That means it is always at the base currency position. Whereas when you see JPY, it is always at the quote currency, right? You will never see that in the base currency position, because there is like something called as a hierarchy for all these, right? These top 8 currencies. So Euro, GBP, AUD, New Zealand dollar, US dollar, Canadian dollar, Swiss franc, Japan yens. This is a hierarchy. So if you are trading euros with USD, always EUR will be the base currency and USD will be next. For example, you are trading franc with Australian dollar. Always your Australian dollar will be the base currency, and then the Swiss franc, right? So they need to be in that order, right? This is how the conventional syntax, or this is how the currencies will be noted, right? Which should be the base currency and which should be. So if it is in the top in the list, that will be in the base currency. Whatever is in the bottom in the list, that will be in the second place. right? Which is a code currency or counter currency. So when assembling a currency pair, whichever currency is higher is the first one, right? That is base currency. Whichever is lower, that is the second code currency. So always remember that, so that while looking at the alerts also, you understand why always you see JPY in the second position, and you generally see EUR. Whenever you see currency pair, wherever EUR is involved, EUR will be always at the first position. Then, right, another most important concept in forex trading is to understand what is a pip and what is a pipette. So just like, right, with futures, you have something called as tick, right? If there is a one tick with ES, you make some $12.50. Or if it is one tick with NQ, you make some, let us say, $2. When there is a tick with crude oil, you make $10. In the same way, in forex also, just like in futures we have ticks, or in stocks you have basically points. In the same way, right here you have something called as pip and pipette. What is pip and pipette? Let us see. Right, a pip is nothing but a percentage in the point, right? A measure of change in the value in the currency pair. Generally, it is the pip is nothing but a fourth decimal place, right? In a currency pair, you always have some value between two different currencies. The fourth currency, fourth decimal place is the pip value. Let us take some examples so you will understand it better. For example, euro to USD. So euro is the base currency, USD is the code currency. Let us say when you bought it, when you bought the euros using USD, it was 1.3500. After 1 week, when you want to sell the euros, now the value is 1.3505. That means how many pips are there in this, right? In this conversion, in this transaction, how much pips you gained, right? As I mentioned, your base currency increased. The value of the base currency increased from 1.3500 to 1.3505. You can put it in the chat window. What do you think? How many pips are there in this transaction or as part of this? Right, exactly, right, yeah. That is 5 pips. Because as we discussed, it is nothing but, right, it is the fourth decimal point. So if you see, right, you just ignore, right, whatever is at the before the decimal point. If you deduct 3505 minus 3500, you get how many pips are there. Then let's take one more example, right? Little difficult. So now this currency pair, euro to USD currency pair, moved from 1.3400 to 1.3350. So how many pips are there, right? Okay, can you guess or can you put your answer? What do you think? How many moves from 1.34 to 1.3350? Right? Basically, again, as I mentioned, just you ignore this 1 point and just you can subtract 3350 to 3400, or right? Then basically it is 50 pips. You lost 50 pips as part of the transaction. You bought it for 1.34, but it so 3400 minus 3350, that is basically a loss of 50 pips. Only for right, Japan ends, right? For everything else, it is the fourth decimal, right? Fourth decimal means if this is 9 and this is 2, then 9 minus 2 is 7. But if you see a difference, right, the fourth decimal is zeros and 0 here, then you will count from the third decimal. So you subtract 3350 minus 3400 minus 50. Whereas only for Japan, right, Japan ends, it is the second decimal place. So again, let us take USD moves from 100.10 to 100.15. Then basically 15 minus 10, that is you have 5 pips. Another example, 100.25 minus 100.10. That means it is a decrease of 15 pips. You bought it at 100.25, you sold at 100.10. That means a loss of 15 pips, right? Whereas for other currencies, you start from fourth decimal, whereas only for Japan ends, you do it from the second, right? After decimal point, look at the second one. And then, right, basically whatever is before decimal, if the numbers are same, you can just ignore them and then subtract this minus this. You will get the answer for how many pips. So what is a pipette, right? Again, you can correlate with NQ and MNQ or ES and MES. In the same way, pip and pipette are same. It is like 1/10 of a pip, right? In if you get $50 for 1 point move in ES, you get $5 for 1 point move in MES. In the same way, here pip means if you get $10, pipette means it is like fifth decimal point, you get $1. So it is 1/10 of a pip is nothing but a pipette. Again, right, let us take an example. Euro by USD move from 35005 to 35057. So what is the overall change, right? Again, you can subtract this 35057 to 3505, that is like 5.2 pipettes. It increased, there is an increase in the, so there is the fifth decimal place. So yeah, don't get confused much. It is just subtracting. You can use a calculator and you can do it. So again, right, because your profits in Forex is all based on the pips and pipettes, right? You measure it, how much profit you made, you always measure it based on the pips and pipettes. That's why these terms are important to know. So based on the lot size you are trading, right? In option contracts, you have like 100 stocks for one contract. In the same way, in Forex also, you have different lot size, and based on the currency, you will make that much profit, whichever currency you are doing. For example, there are, again, right, just correlate it with the futures, right? The standard lot, you make for every 1 pip move, you make $10. If you are trading with one standard lot, that means 100,000 units of the transaction. If you are trading with one mini lot, which is 10,000 units, you make $1 per pip, right? Just like in ES, you make $50. With MES, you make $5. In the same way, here, if you are doing with a big standard lot, you make $10 for every pip change, right? In the previous examples, you saw that if Euro by USD, it is moving from 1.3505 to 1.3510, then it is like a 5 pip increase. Then if you are trading with one standard lot, 5 pips into $10, that means you make a $50 profit with the transaction. So if you are doing a mini lot, right, you are not trading with a bigger size, you are trading with a smaller size, then you make $1 for every pip. If you are doing with a micro lot, that means you are maximum investing $1,000 in a transaction. You make 0.1, that means 10 cents for every pip, every small right, fourth decimal point change, you will be making 10 cents for every pip. And if your quote currency is USD, that means you are doing euros with USD or GBP by USD or Australian dollar by USD. If your quote currency is USD, you will make the profits in the US dollars, right? Either you make 10 US dollars or you make $1 for mini lot or you make 10 cents for a micro lot if your quote currency is US dollars. If your quote currency is euros, then your profit will be in the euros. For a standard lot, you make 10 euros. For a mini lot, you make 1 euro. For a micro lot, you make 0.1 euros. So based on the currency which you are trading, the quote currency, and based on the size of the transaction, right? Whether you are doing a bigger lot or a smaller lot, a medium lot. Based on that, if you are doing a bigger lot, you make more profits or more loss, right? If the pip, instead of going up, if it goes down, you make that much loss, right? Every pip change decrease, you lose $10. If it goes up, for every pip increase, you make $10. So you better start with, right? Again, you start with the paper account, then you start with micro lots, then once you get confidence, move to mini lot, and then once you get more confidence, you can go to standard lots. So don't directly go and trade with standard lots. So again, right, if you are buying 2.3 standard lots, right? You are, let us say you have a big account, or you have a high risk profile. You are trading, right? You are buying 2.3 standard lots of euro by USD. That means you are selling USD and buying euros. And how much you will make? Because it is 2.3, right? One standard lot is $10 per pip. If you are doing 2.3 standard lots, 2.3 into 10, that is $23. For every fourth decimal point to move up by 1 point, then you make $23. If it moves 100 points, you make 100 into 23, $2,300 in the transaction. So based on how many lots you are taking, and what is the size of the lot, and what is the currency you are doing, you will make that much profit or that much loss based on the transaction size. So if you are doing 5.5 mini lots, can you guess how much profit you will make? What will be the value per pip, right? Standard lot means $10 per pip, whereas mini lot is $1 per pip, and it is 5.5, and the currency is Australian dollar. So you will make 5.5 Australian dollar per pip, right? If it is, instead of mini, if you have standard, then that will become 55 Australian dollar per pip. Is it clear? Right? One is, what is the quote currency? Second is it a standard? Is it a mini, or is it a micro? Then what is the quantity? So if it is standard, you multiply this with 10. If it is mini, you multiply it with 1. If it is micro, you multiply with 0.1. And then whatever is the quote currency, you will get the profit in that currency. Then, right, just like stocks or options or futures, you have mainly 3 types of traders: short-term, medium-term, and long-term traders, even in the Forex transactions. Short-term traders, generally who trade below 1 hour time frame, right? They generally use 5-minute, 15-minute charts, and then their potential target is 5 to 50 pips. They look for a move in 5 to 50 pips. I hope everybody is clear, right? Pip is nothing but, forget about Japan, and if you are talking about any other currency, it is basically a fourth decimal point, 1.3500. Right, the fourth decimal point is the pip. So then generally the potential target for our day trading is 5 to 50 pips. We want to make that much, and holding time generally less than 3 days. Right, within 3 days you want to make that profit and close the transaction. Then medium-term traders, right, who are like swing traders, they generally look at a daily time frame, or right, 4-hour time frame or 1 hour time frame right, while doing the technical analysis, and that profit target is generally 50 to 200 pips, and holding period is 3 to 10 days. We'll hold the trade, right? It is like a swing trade. Then long-term trade, where you are looking at 4-hour chart or a daily chart, and your potential target is more than 200 pips, you want right, you have a strong confidence, right? For example, you are thinking that, oh, inflation is going up and the CPI report is there, you are expecting US dollar will go down, then you can, right, you can take a long term trade, right? If that CPI meeting is after 2 weeks or 3 weeks, and you think that numbers will be, the CPI numbers will be bad, you can use a long-term trade where your holding period is more than 10 days, and you can make a 200 pips with, right, you may do it with Swiss franc or Australian dollar or whichever, with a US dollar if you think US dollar value is going down. So again, right, it is as a forex trader, right, just like in any trading, you use your fundamental analysis, you use your technical analysis, look at the charts. The concept is same in for any security, right, whether crypto or stocks or options or futures or forex. It is the same technical analysis, same candlestick pattern, same chart patterns, same indicators. There is nothing different, right? Everything, it is based on how, right, your support resistance levels or trend lines or your channels. All these things are common across all the securities. So we want to look at the news point of view, and we want to look at the technical analysis point of view, and we want to use that system and make profits as part of that, the transaction, right? Whatever transaction we are making, we can make money by determining the direction. Okay, this seems to be will go down, right, because of so and so reason, or because of this head and shoulder pattern, or because of this right, or this particular candlestick pattern, or because of this particular news, they have some inflation in right, UK is very high, this seems the value of GBP will go down. So combining those two, we can make much bigger profits with the forex trading. And generally, how the alerts will look like, right? You will start looking at some of these alerts. So, for example, this is one alert, right? CAD, that means Canadian dollar with Japan yen. The Canadian dollar is the base currency, and as we discussed, always Japan yen will be the second. So, and you are taking a long. That means you are buying a Canadian dollar, selling Japan yens at 104.89. This is your uh, entry point. And what is the right? You are going long. So that means you are take profit, right? This is your target one, this is your target two. Then this is your stop loss. For example, instead of going up, if it starts going down, then you want to take a stop loss. So if it moves from 1.4 to 1.105.5, that means you already at a break even. Anything above that is like you good profits, right? You if it moves from 104.89 to 105.4 or something, because there is always, right, between the buying and selling, there is some difference. So you may not immediately start making profits. If it starts right, in futures, you can immediately start making profit, but in the forex transaction, there is always some difference where you have a break even point at a certain price. After that, if it starts moving, you will make more profits. So it is like your break even point. So if you are, if the alert, right, if you are shorting something, then your alert will be like, okay, this Swiss franc with the Japan yen, you are doing a short at so and so point. These are right. Now it is at 147, but you are expecting the this currency to go down, and your take profit levels. This is your target one, target two. This is your stop loss, and this is like your break even. So you will see this type of alerts in the channel. And when you see that type of alert, what you will do, I'll show you. So again, there are a lot of platforms, trading platforms for forex transactions, like Meta4, Meta5, and then there is one right, which I am using called So you have, so this is one of the famous platforms for Forex trading called ovanda.com. So when you go to ovanda.com, right, they have, right, so just similar to Thinkorswim platform, they have a web platform, they have a desktop platform, and they have, right, within their platform, they also give access to Metaphor. So they have multiple types of platforms. So this is what you are seeing here is their web platform. So trade.ovanda.com. This is their, so if you want their desktop version, you can install desktop, or you can install the MetaTrader 4. So when you go here, right, you can initially start with, you can see this is a live account. Instead of live account, you can click on the live account and you can change it to switch to demo, right? Just like paper trading, right? In stocks or options, we do paper trading, right? You can switch it to demo. And you will see all the top favorite forex, right? Different currencies here. If you want more currencies to trade, you will see them here. I think you're not seeing the other screen, right? Okay, right. This is the Wanda platform. I hope now you can see it. Right, this is one of the right, widely used trading platforms for forex markets. So, right, you have something here. You can switch to live. That means you are using your real money. Now you are in the live account. That means whatever you do, you will make profit or loss with your money. But when you start, you always start with the demo. Switch to demo. Right now I am in the demo version. And you have all the charts here. You have, right, there are some favorites here, right? Some of the most commonly used, right, which we discussed, like GBP, USD, Australian dollar, USD, Euro, USD. Or if you want to make any of other things, you can also make them as favorites. You can come here and select them as favorites. So let us say, right, for example, you received an alert, something like CHF JPY short. So CHF JPY short, right? For example, if you want to buy this, you have to buy at 148.283. But if you want to sell this, right? For example, whenever you go to this foreign exchange center, you know that you want to buy, you pay a high price. But if you have the same dollars, you want to sell it, you get a low price. In the same way, based on the alert, right? If the alert is saying long, then you will click on this side. If you want to short, you will click on the left side, right? You have a right side and left side. So this side is like long. If you want to go long, you will click here. If you want to go short, you will click here. For example, I want to take a short on this CHF JPY. I will click here and then it will show that, okay, you want to sell it. You want to sell one lot of this. And what is the take profit? Again, you will go to the alert. So take profit is, right, let us say 144.6. You will enter 144.6. And what is the stop loss? Is 149.3. Right. and then basically you click on submit. So now you are selling it, right? You entered a trade. You entered a market order 11:21 7:52 central. You did a short transaction. For example, now you want to do a long transaction, right? CAD JPY long. You don't have it in the favorite, so you will go to the ForEx tab and you want a CAD JPY. You have CAD JPY here and you want to go long now, right? Because you want to go long, you will click on. So now you are doing buy, right? Earlier you were doing sell. Now you are doing buy, and what is your take profit? Is like 106.54. And what is your stop loss? 103.95. So you are expecting this many pips. So, right, again, already it started moving, right? It was an alert from yesterday. Already it moved nearly $1 up. So that's it. You submitted an order, market order. You are buying a unit. Earlier it was you sold it. Now you are buying it. And whenever it happens, right, whether it hits the stop loss or it reaches to the profit. So how many pips are there? 104.892, 106.5400 minus 8920. That means you will make some 150 or 200 pips out of this. Again, based on if you are doing a standard lot, one standard lot, you make 200 pips into $10, $2,000 profit, right? If you are doing a mini lot, you make a $200 profit. If you are doing a micro, you make a $20 profit. So like that, based on the size, currency, based on the transaction you are doing, you can, you'll make that much profit as part of the. So if you go here, it will show like what are the orders you placed, right? 144, this is the target. What is the, how many pips you are targeting? Still how many pips it is away to reach the target. Like that, you will have, right, your positions, your activity, all this information you can see here. And then if you want to look at the charts, you can change the charts, or if you click here, you can look at the charts on 5-minute or 10-minute, 15-minute, just like your other platforms. But main thing is, if you are going long, you will click on this side. If you are going short, you will click on this side. And then you basically enter the take profit level and the stop loss level. And if you want to increase the units, you want to buy more, right? You can increase the units based on the trading value, how much money you want to put it, what is based on, right? What is your account size, how many units you want to buy, right? We already discussed that standard means how many units and mini means how many units. Based on those things, you can buy whatever units you want. So, right, this is what I wanted to share today, right? Basically, what all we learned today, we looked at so many things. What are the advantages of Forex over stock market? And then we looked at what is Forex, who are the players in the Forex market, what are the various terms used in the Forex market, then what are the advantages of Forex trading, what are the Tokyo, London session, New York session, the timings when you can do trade, what is currency pair, what is base currency, what is code currency, and we looked at why we have to use those base currency, code currency, what are the top 8 currency pairs which we use, what is this major currency, cross currency, exotic currency. Generally, these are the standard 8 which 80% of the traders use to do trading, and then another 15% here, another 5% here, and then the hierarchy, how they will be placed in the first position and second position based on their hierarchy, and what is a pip, what is a pipette. We looked at all these things, and then we looked at lot size. Based on the lot size, how many units you are buying, you will make a bigger profit. If you buy bigger units, more units, you make more profits. If you buy small units, you make a less profit. Based on the currency you are doing, on that you make the profit in that currency value. Different types of traders and what type of ranges we are looking based on the holding period. And then we looked at how the alerts will look like and how you have to enter those trades in the platform. So that's what, let me read out some questions. Yeah, Forex trades are cheaper than options or futures because the commissions are very less. Right, based on the number of units you are buying, that is where your standard or mini, right? If you saw here, when you are buying a transaction, you are giving the number of units, how many you want to buy. Based on the units you are buying, it will determine whether you are doing a standard lot, or you are doing a mini lot, or you are doing a micro lot. How many units they have? This many, 957,000 units they have. So what will be the trade? If you are trading 33 units, the trade value is $34.48. If you do 500 units, it is like $522 you are trading. If you do 5,000 units, 5,224 USD you are using. So like that, based on the number of units you are so standard lot is 100,000 units. If you're buying a mini lot, it's 10,000 units. Micro lot is 1,000 units. Yeah, anyone can do it, right? As long as, even though you are on visa, it is like, if you're doing it after hours, it is not impacting your main primary job. You can do it. Right? Your minimum account balance can be even $20, $50, because you have a high leverage. Anyone can do it. No, Ovanda is also having some offer that if you invest $500, they are adding another $500 bonus referral. But again, provided you do some transactions, certain quantity, I'll send the information about that. And you can again start with a paper demo account. take time to practice. And once you become confident, and then you can start taking with smaller lots, micro lots, and then mini lots, and then standard lots. Right, I'll share the recording of the session. I know there are a lot of terms, new terms, so it might be difficult for many of you to remember everything. You can watch recording one more time, so you will understand it much better. Thinkorswim is not a platform for forex trading. IBKR not in US. In UK, if you are from UK, you can use IBKR for forex trading, but not in US. India, maybe IBKR, I think you can use in India. Right, again, you can call the customer support of that platform, and but I don't think E-Trade or Robinhood, I don't think they have forex trading. Forex market is not so volatile as options, right? Unless there is some news. So that's why you don't see too many alerts in forex trading. Maybe max one alert per day, based on, right. For example, if some China something is happening, lot of COVID cases are increasing, shutdown can happen. Then maybe their currency value will go down. So we can trade with their currency. So based on charts, and second thing is based on the news. If we combine, then the success will be much higher. Yeah, maybe Thinkorswim allows. So maybe I never used it, but yeah, I think Thinkorswim also might have that option. Maybe you have to call the customer support and ask them to enable that, and they will enable it. It is a 5 day a week, 24 hours, but 5 days, not on Saturday, Sunday. Now, these alerts will be shared in the free channel for now, and then we'll have a separate channel for forex trading. These will be mainly swing trades or long-term trades. These won't be like a day trades. Mainly, yeah, forex trading will be swing trades for 3 to 4 days. Yeah, again, take time. Don't be in a hurry to do on live trading. Slowly start with paper trading or demo account. Time frame means, right, which chart you are looking. Are you looking at a 4-hour chart or 1-hour chart to take the trades? Holding period means how many days you are holding, right? How many days, for example, if it is a swing trade, a medium trade, you will hold for 3 to 10 days. Your profit can be 50 to 200 pips. But the chart you are looking for analysis is a 1-hour time frame or 4-hour time frame. So this is for the analysis. This is for the holding period. Yeah, we'll start for right forex also. We'll start mirror trading. No, yeah, there won't be. I'm not 100% sure, but I don't think there will be any day trade pattern rules, PDT rules, pattern day trading rules for forex or futures. You won't have them because it is like 24/7 market. Uh, those rules will not be applicable. The best thing is you can do at any point of time, and it's a global market, and you can start with small, even with $5-10 also you can start. And those are the advantages. Taxes, maybe we need to check with the CPA on that, but I think it will be similar to futures. Taxes should be similar to futures, where some part will be long term, some part will be short term. But I'll check with one of the CPAs and get back on that. Yeah, I think that's all with all the questions. I'll share the recording. You can see it one more time and start taking some paper trade account trades. We'll be sharing alerts. You can practice them out, and then yeah, we can make money. But yeah, have patience. There is a lot of time to make money. Take time to learn first. Good night, everyone. Thank you, and talk to you in the next session.